This is Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. President Trump hails a new trade deal, saying Vietnam has agreed to a 20% tariff rate that's easing fears of supply chain snarls in sectors including clothing and furniture. That trade news helping Wall Street extend record highs, but it is a more cautious open ahead for Asian stocks as traders await the US jobs report. Plus, Tesla rallies despite a 13% quarterly sales slump as investors bet the decline has hit bottom.
Nikkei futures holding steady right now after two sessions of losses already. We had the Japanese yen also slightly weaker in the overnight session. Of course, that stalling of the U.S.-Japan trade negotiations weighing on Japanese assets. But when it comes to today, what we'll be watching is the 30-year JGB auction. We already had a solid 10-year auction earlier in the week. And of course, what we're watching is that test of demand for the longer end, especially when we have fiscal concerns, not only here in Japan, but just globally weighing and roiling debt markets. Of course, we're watching the UK debt market overnight with 30-year gilt yield surging. We have the pound also plunging. There are more concerns now that the Chancellor of the Exchequer could be ousted, and that would be more challenging for Britain to bring their fiscal house in order. That also weighed on treasuries. Take a look at the setup as we're seeing U.S. futures after a stock market rally already in the overnight session. Of course, we are headed towards another data set. We're talking about the jobs report, the consensus for 110,000 jobs to be added in June with a potentially slight uptick when it comes to the unemployment rate. What that will mean for the Federal Reserve, of course, is the key question as we're seeing right now. Futures not doing much and treasuries also holding steady. Remember, we do have a shorter trading session in the U.S. because of the Independence Day holidays, Heidi.
And, of course, trade playing so much of a big part of the sentiment that we're seeing, Shery. President Trump saying that the U.S. has reached a deal with Vietnam, giving full market access to American companies, while slapping a 20% tariff on all Vietnamese imports. Hanoi hasn't confirmed the framework deal, which would be the third reached before that key July 9th deadline. Our Bloomberg senior editor, Derek Wallbank, joins us now for more. So, Derek, what do we know about the contours of this deal and, what Vietnam has agreed to?
Well, Heidi, it's a really interesting sort of deal here. It's a little Vietnam becomes number 2 that we've got on the board behind the United Kingdom. What you're looking at would be about a 20% tariff on Vietnamese exports to the U.S. with a 40% levy on goods that are deemed to be transshipped. Now, this is a real sort of key distinction here. It's a kind of bifurcated deal, right? So 20% tariff on Vietnamese goods. That would be things that your Nikes, your Lululemons of the world produce in that country and ship off to the United States. And Vietnam is a major supplier of goods exported to the United States. At the same time, there has been a lot of concern in the White House, particularly among the China hawks, that a lot of goods in Vietnam coming to the United States are essentially coming from China, getting a sort of spit shine to be able to put a made in Vietnam label on them and sent off to the United States. That's what they're trying to prevent there with that 40%. So a lot of meat to put on the bone, so to speak, in terms of how this would work, how you would go about that certification, what the checks would be, et cetera, et cetera. But that is altogether deal number 2 for this White House as we look now just a week before the critical July 9 deadline.
Well, deal number 3, if you consider that you had something with China, a framework at least. I mean, given that there was some sort of understanding with Beijing, why are we seeing the Trump White House trying to rein in China when it comes to partnering up with other countries and trying to impose restrictions on Chinese content?
Well, I think that is a key trend to watch here, right? China has always been on a sort of separate track when the Trump administration considers these trade deals, and they've been very clear and open about that for a long time. And look, a deal to reduce hostilities and sort of take down the temperature, as that framework is still a little bit, short of one of these like fulsome understandings. But the United States has for a long long time seen Beijing as a sort of strategic competitor in the area. The U.S. has a number of complaints that they think that China is not necessarily playing fair in a whole variety of ways that would take us hours and hours to fully list through. But the short version of it is here that when you're looking at these deals, this one for Vietnam is very, very clear about transshipments, and transshipments very much has China in mind. So it bears looking as the White House is going through in this last week. Will there be other deals structured like this? Will there be other sort of provisions that are aimed at Beijing? And that's something that we're going to pay a lot of close attention to over the next week.
Bloomberg senior editor Derek Wall back there with the latest on those trade negotiations. President Trump also fighting another battle domestically. We're talking about once again calling for the resignation of Fed Chair Jerome Powell. The president posting on Truth Social, linking to a Bloomberg News article about a federal official calling for Congress to investigate Powell. U.S. economy reporter Mark Niket joins us now from Washington. Mark, what's this about?
Yeah, this is the latest in President Trump's effort try and get Jerome Powell to leave. The president's been unhappy with the Federal Reserve Chairman for not cutting interest rates. He calls him too late Powell. And he's been posting on Truth Social and saying in press conferences and gaggles how he'd like to see somebody else other than Jerome Powell as federal. Unfortunately, he can't, from the president's perspective, he can't fire Jerome Powell. And his term is not up next May. But the president's been appointing somebody or naming somebody early who would take over for Powell, which is setting up sort of a potential shadow chair, Federal Reserve Chairman.
Mark, in terms of the jobs data that we're expecting, how's the labour market holding up?
Well, we're going to find out. The economists are watching this jobs report very closely because they're looking for sort of signs that the U.S. job market has been cooling. The median estimate in Bloomberg survey of economists shows an increase of 106,000 jobs in June, but the unemployment rate ticking up to 4.3%, which would be the sort of the highest jobless number since 2021. And the question is, will the Federal Reserve look at numbers and decide that the job market has cooled enough that they would consider interest rates at their next meeting in July. The thinking is that the Fed is going to hold tight on cutting interest rates until at least September, waiting to see what the impact of the Trump administration's tariffs have on prices and inflation. But if the jobs report shows a significantly deteriorating job market, it'll put more pressure on the Fed to consider cutting interest rates as soon as its July meeting.
Which is not necessarily what we've seen so far, right? How resilient has the labor market been so far, especially with the vulnerabilities coming from the tariffs?
It's been very resilient. We've seen steady job numbers in recent months, although the past months have been revised downward, and we're looking for that in tomorrow's report. But the sense talk to economists is that he's not mass layoffs, that the economy is still in good shape, but they're not hiring either because of the uncertainty you mentioned. The tariff policy in particular, President Trump's just been all over the board on his tariff announcements, as well as tax policy. Companies are watching the inflation bill being debated in Congress, in the House as right now, to see if tax cuts are going to be passed, and they're holding off on hiring decisions until they see more certainty in both trade and tax policy.
Bloomberg's US economy reporter Mark Nikat there. Take a look at quite a bit of volatility when it comes to some US assets, particularly when it comes to FX and treasuries going into the jobs numbers that we're looking at. Treasuries are falling, spillover from the sell-off that we saw in the UK actually weighing again on the long end, just reminding us when it comes to these woes facing global sovereign bond markets, it really is a global story rather than just a treasury story. So that ahead of that pivotal US jobs report, some fresh fiscal jitters there as well, not just affecting the US with the tax bill, but also the UK bond market, I should say, that we saw as well. We did see debt really slipping across the curve. The yield on the 30-year treasury is about 5 basis points higher there in that previous session. We are also watching what next when it comes to the dollar, right? The fear indicator hitting the highest in about 2 months. There's a big question as to where the euro runs from here with the best winning streak in 2 decades against the greenback. Coming up next on the Asia Trade, we'll be live at the Kyoto Innovation Summit speaking about Japan's startup environment with Headline Asia and MUFG Innovation Partners, plus Morningstar joining us to talk about their stock strategies. Much more ahead. This is Bloomberg. Well, President Trump has met with conservative lawmakers to discuss his signature tax legislation as doubts grow over whether the bill can pass by July 4th. House Speaker Mike Johnson can afford to lose only 3 Republican votes in the closely divided chamber.
Every caucus in the House has had the Speaker's attention. I've heard their concerns about it, and the thing about it is when you have a piece of legislation that is this comprehensive and with so many agenda items involved, you're going to have lots of different priorities and preferences among people because they represent different districts and they have different interests. But we can't make everyone 100% happy. It's impossible.
Our congressional reporter Steve Dennis joins us now from Capitol Hill in Washington. And Steve, you know, as the House Speaker alluded to, this is a piece of legislation that has run into resistance both from hardliners, fiscal conservatives, as well as moderates, right? Is it possible to get a point where all of them are appeased enough to be able to pass it?
Yeah, I mean, we've seen this movie before with this House Republican slim majority where there's a lot of gnashing of teeth and members who say they're not going to vote for it or tweet they're not going to vote for it. And then they get a phone call from President Trump or they get a visit to the White House and they come back singing a different tune. So if past is prologue, they're going to keep on negotiating behind closed doors about future bills. You know, this is not the only bill that will happen this Congress and people want other things. And, you know, if past is prologue, they'll keep negotiating until they have a deal, potentially after midnight, potentially go into the morning hours, and then they'll vote. And, you know, the Republican leadership is confident that in the end they will have just enough votes to pass this. Right now, there's only one really hard no, Thomas Massie of Kentucky. Warren Davidson, who voted against it the first time around, is voting for it this time around. So that's in a chamber with only a few votes separating the two parties, that's a significant win for the president.
Steve, we know that President Trump loves his self-imposed deadlines. What's this about July 4th and what happens if the bill isn't actually passed?
There's no real deadline. This is just, you know, theater, really. If they don't pass it by July 4th, they'll continue to wrangle through July before the August recess. And if the House had to amend it to appease some members of the House, then you would potentially have a conference committee with the Senate. And, you know, that happens. It's not impossible. It's not unusual. But it's something that the president definitely does not want to have to do. You'd have weeks more of wrangling. And, you know, there's no guarantee that it would pass the Senate in an amended version. You know, Lisa Murkowski basically doesn't like the bill, but got cajoled into voting for it after an all-night session where they plied her with special breaks for Alaska. So getting her and all the other cats in the Senate in line for another narrow nail-biter vote might be a bridge too far.
Bloomberg Steve then is there covering, of course, that tax and spending package that President Trump is trying to pass in Congress. And over in the U.S., we're also watching Tesla shares today jumping after it posted a less drastic decline in sales than some analysts feared. Second quarter shipments fell 13% from a year earlier. For more, Bloomberg's Kara Carlson joins us now from Austin. And Kara, yes, so it's actually surprising to the upside, but at the same time, we are expecting another year of declines when it comes to the annual vehicle sales numbers. So how does the future bode for this company that's been challenged from everything from branding to really their operations in China as well?
Yeah, so Tesla's had a really tumultuous year. Last year, it reported its first decline in annual sales in about a decade. And so this year they've really been watching to see if sales can turn around. They had a very tough first quarter. The second quarter was a little less than the worst of what people were expecting. So there have been some early signs that maybe they're starting to turn things around a little bit. It still remains to be seen, especially in key markets. China has had a little bit of some indication that perhaps some shipments have increased just marginally year over year, but quarter over quarter they did see, month over month they saw an increase in June, and so there's some thought that that could be a turning point for Tesla in China and the ongoing price war. Their China factory also ships to Europe, so it could be some indication that there might be at least some more shipments going out there.
Are we seeing much of a turning point when it comes to perhaps the implications of Elon Musk's political career and, even now the sort of reignition of the feud with President Trump and his criticism over the tax bill? Is that still going to continue to play into uncertainty when it comes to how Tesla customers feel?
It's something that analysts and investors are watching closely. There is a lot of stock pressure when it comes to Elon Musk. He's something people watch very closely and tie very closely to Tesla, but it remains to be seen how this might impact sales, especially in North America going forward. And then there's also a lot of focus on robotaxi, which they just launched a very small geo-fenced area in Austin this month.
Bloomberg's EV reporter Kara Carlson there with the latest on Tesla. Well, sticking with EVs, and Chinese EV giant BYD is pausing plans for a major plant in Mexico, citing global trade uncertainty. The company says it still aims to expand its production footprint, but wants to wait for more clarity before making a decision. BYD recently opened its first factory outside Asia in Brazil, which will be capable of producing 150,000 cars annually. In a major blow to Apple's global supply chain strategy, Bloomberg has learned that Foxconn is pulling hundreds of Chinese engineers and technicians out of its factories in India. The move threatens to derail Apple's high-stakes effort to shift manufacturing away from China. Let's bring our China correspondent Min Lo for the latest. So, Min, do we know the drivers behind this decision?
At this point, it's not very clear yet, although we are hearing from sources that this move began about 2 months ago and more than 300 Chinese workers had already left, leaving behind mostly support staff from Taiwan. There are a couple of conjectures now from analysts that we have been speaking to. Our Bloomberg intelligence team, for example, believes this could be a move that is in anticipation of tariffs that could be placed on Indian goods. But bear in mind, though, the Trump administration has also provided carve-outs for electronics, exempting them from further tariffs. So this may not be the only reason. The other possible reason could be perhaps because of the Chinese government move to try to strengthen its own supply chain in China, because we know the Chinese government has verbally been encouraging local government officials to prevent or to curb exports of specialized manufacturing equipment or tech transfers, or even the movement of labor to countries like India or in Southeast Asia, in an attempt to prevent manufacturers from diversifying their supply chain out of China. So it's not clear at this point whether Foxconn face some sort of pressure from the Chinese government, but certainly something to keep in mind when we view the recent events.
So will there be an impact when it comes to production out of India?
Yeah, so India currently accounts for about 20% of global output, and it is the importance of these Chinese workers is because a lot of Foxconn's production has been concentrated in China, and so these Chinese workers bring with them a lot of experience. They have been critical in training a lot of local Indian staff and in helping to speed up expansion in India, because Apple's plan was to ramp up production in India so that by late 2026, India will be able to produce enough supply to meet the entire U.S. demand. Again, that is in response to Trump's tariffs. But even then, this is a plan that President Trump has criticized, calling on Apple to produce iPhones for the U.S. market in the U.S. But of course, the higher cost of labor there makes that less feasible. And if China does also put in place certain measures to maybe prevent its Chinese experienced workers from relocating to the U.S., that could be another difficulty to shifting production onshore to the U.S. So yes, it could have some impact on perhaps the efficiency of these supply assembly lines in India. But for now, though, the Indian government has spoken to Bloomberg and said that they do not observe any impact on the assembly line production so far. So we'll have to see. It does come at a critical time when Apple has been trying to ramp up the production of its latest iPhone 17 in India.
Yeah, Bloomberg's China correspondent Bin Lo there. We do have more ahead on the Asia trade. This is Bloomberg. And here's the latest from the corporate front. OpenAI has agreed to rent a massive amount of computing power from Oracle as part of its Stargate initiative. Sources say the rental will total about 4.5 gigawatts of data center power in the U.S. Oracle is also said to be developing multiple data centers across America to meet the additional demand from OpenAI. Microsoft is cutting about 9,000 workers in its second major wave of layoffs this year as it looks to rein in costs while ramping up AI spending. The company says less than 4% of the total workforce is affected by cuts that are meant to streamline processes and management layers. Microsoft also cut 6,000 workers in May, focusing on product and engineering positions. TikTok is also cutting more workers from its U.S. e-commerce unit in a third round of layoffs there since April. A company spokesperson says a difficult decision was made to adjust parts of the team, but didn't reveal exactly how many jobs were cut. TikTok Shop already reduced headcount in April and May after falling short of internal sales targets.
Shery, take a look at what we're following when it comes to the Asian Open. A little bit more caution as we head into the start of trading, despite, of course, what we saw overnight, which was quite a bit of exuberance in trading. The news of that Vietnam trade deal kind of setting up for another session of record highs for US stocks. But here in Asia, we're now turning attention ahead of US payrolls. There, that cautious open as we await the jobs data. Stocks hitting that record high, but that is not sort of likely to pass through with quite so much enthusiasm here in the Asian session. You're seeing Sydney stocks sitting a little bit softer there at the moment. Nikkei futures also looking a bit muted, but S&P futures, they're extending those gains, Shery.
All of this really ahead of that jobs data that's coming out on Thursday in the U.S. instead of Friday that it usually does, right? Given, of course, that we have the Independence Day holiday and really the trajectory of where the Fed is going. So the dollar did little in the overnight session. We are not seeing that much of an impact in the currency markets in early Asian trading. But what we're watching is the British pound, because it really tumbled on those UK fiscal concerns with speculation about Chancellor of the Exchequer Rachel Reeves' possible ouster, really making investors nervous about Britain's finances. This is Bloomberg.
Take a look at what we're watching across the commodities complex there. This is a picture when it comes to New York crude, off about 0.3%. We're seeing OPEC's oil output climbing as the Saudis are leading their pursuit of market share once again. That increase of crude production by 360,000 barrels a day in June to an average of 28 million per day being led by Saudi Arabia. So all of that is adding to some further downward pressure to crude prices. We're sitting pretty close to that $67 a barrel level in that Wednesday session. This, of course, adding to the fact that we've seen some of those geopolitical concerns, Middle East concerns, really fading in recent days. We're also watching that downside when it comes to copper. This is only a little bit of a pullback, given that we've seen that price climb above $10,000 a tonne due to a lot of these market players taking advantage of price gaps between the major markets in the world. Iron ore is also seeing a bit of upside there. Well, speculation over Chancellor Rachel Reeves' future had sent UK markets tumbling, bond yields surging, investors fearing a return to fiscal instability. But Prime Minister Keir Starmer has now moved to shut down those rumours, confirming that Reeves will remain in her post. For more on the fallout, what it means for global investors, let's bring in our Markets Live Asia lead, Garfield Reynolds. And Garf, we saw this sort of peter out through to the longer end of treasuries as well, right? Is the panic over, given that it's taking place in, a broader sort of structural time of difficulty for longer-term sovereign bonds?
Yeah, it really was very poor timing as far as the global bond markets are concerned. We're just as people were watching, Trump's tax and spending bill go from the Senate to the House, with the ultimate result out of the Senate being at the more extreme end when it comes to how much it's going to add to the deficit, provided you use actual math, and also the extent of the Medicaid cuts, which complicates the potential for it to pass through the House, but either way makes it clear that it's going to be fiscally damaging. So you have that going on. We've had fresh pressure from President Trump about how Fed Chair Powell should resign. So there are plenty of reasons to be worried about bonds, particularly treasuries, which are the benchmark for global bonds. And then along comes a reminder for investors that one of the more recent times when global bond markets really descended into turmoil was when we had the Liz Truss episode. And sure, what's going on with Starmer's government is a lot less alarming than what went on back then, but it's a reminder of how on edge gilt investors are going to be for years to come, having seen that happen, having had to face up to, in many ways, the fact that the UK's political and fiscal outlook is a bit more fractured and fragile after they pulled out of the European Union. There's a nice contrast with Germany looking to boost its spending, and that hasn't caused the sort of sell-off in bonds that you get in gilts almost at the drop of a hat.
We've seen that immense sell-off here in the JGB space as well, with the yield surging to record highs in May. How consequential would the 30-year auction be today?
Yeah, that's a very good point, Shery, because there have been hopes that the JGB situation is getting calmer after we had the 20-year sale last week, I believe it was last week, that went off much better than had been feared, even if it was still, at the margins, not that great. Then we had this week's 10-year sale that did go off in a very orderly fashion. So today's sale, the hopes will be that that 30-year offering goes well. It can't help to have seen gilt yields jumping overnight, and even if Starmer has since come out and backed Reeves strongly, you're still going to get that tension with the long end, especially, as I said, you've got the questions about the US tax and spending bill and about the Fed chair. So that's a bit of a fractious setup for what looms as, what was always looming as the key event in Asian debt markets this week. And that's now even more the case. And you'll be hoping, if you're a bond investor globally, to see that demand holds up in a reasonable, in reasonable shape, and that you don't get a significantly higher yield at the sale than has been expected.
Garth, at the same time, we're hearing Australia is considering scaling back the long-end issuance at this point. Yeah,
well, I mean, that makes a lot of sense given all those issues that we've been talking about. And Australia, there's a couple of things going on there. One, it does have that flexibility because it doesn't commit itself to, every month issuing fresh generic 10-year, 5-year, 30-year notes. Instead, it has bond lines, so it can shift those around to avoid some of the longer ones, and in particular some of the longer ones that are a little bit weird in the actual maturity, or where there's not as much liquidity out there, or they're not as popular for whatever reason. So it makes sense for them to do that. They also have the advantage that they have better borrowing metrics than many countries, and the AUFM, over the last 5-10 years, has emphasised, boosting duration, going longer, because that's a way to sustainably, keep the borrowing costs under control. So it has the chance, to edge back from that, and it's doing it also because its longer dated bonds have a strong correlation still with what goes on with the US 10 and 30. So it makes sense from Australia's point of view. From a global bond investor point of view, again, it's a bit of a warning sign. If Australia is saying, well, it's a little bit too volatile out at the 10-year plus space for us to want to push strongly ahead with selling. If Australia is saying that, that's an indication that there's plenty of concern out there and potential danger. Each of these longer-term debt sales around the globe in the major markets is a potential, fracture point.
Bloomberg's Garfield Reynolds there with the latest on the volatility in the bond space. Of course, there have been lots of questions about the JGB market, especially on the longer end as well, given, of course, the fiscal concerns. And here in Japan, the politicians now promising the moon when it comes to fiscal spending ahead of Japan's upper house election. Campaigning starting today. The fate of Prime Minister Shigeru Ishiba and his minority government hanging in the balance. For more, let's bring in Bloomberg senior editor Brian Fowler. And Brian, we know that the LDP and partner Komeito have a comfortable majority right now in the upper house. Could they become slightly more uncomfortable?
Shery, I think they could become slightly less comfortable, but they'll probably retain the majority. So Prime Minister Ishiba already knows it's going to be a very tough slog, so he's set a pretty unambitious target for this election outcome. The ruling coalition has 66 seats that are up for grabs, plus another 75 that are not going to be contested. It can lose a net 16 seats and still retain its majority, and that's the rather low bar goal that Ishiba has set for the group. And they know it's going to be a tough slog because they know voters are upset about the cost of living crisis. We've seen both the ruling coalition and opposition parties put forth various proposed policies that would help alleviate those concerns, and I think that's the fiscal impact is going to be a big point of topic. Ishiba, his plan is not going to have as big a fiscal impact as the opposition proposals would, and it's also not as popular, I think, as the opposition proposals. So his goal is to convince voters that while his proposal may not be that exciting, it's also it's less damaging to the fiscal conditions.
How popular is the Prime Minister right now, especially given, as you mentioned, all of these concerns about the cost of living as we head towards this election?
Well, his support rating actually nudged a little higher recently, and I think that's due to steps the government took to cool the rice market recently. Having said that, he's still in the low 30 percentile, so not fantastic. On the other hand, look at the opposition, and the top opposition party is the Constitutional Democratic Party. It's the biggest and it's the most popular, but that support rate is still only about 8.4%, single digits. So I think the greatest advantage the LDP has going into this election is that the opposition is, if anything, even less popular and also quite divided. So there's a possibility that they'll split the opposition vote amongst themselves.
What are the risks if Japan doesn't get a trade deal with the U.S.?
Well, the trade deal is going to be a big also focus going into this election. I think Japan wants to be very careful going into the polls, not give anything away. Ishiba has been very steadfast in saying that Japan's going to protect its national interests. It's not going to do a deal that would jeopardize those interests, especially related to the cars industry. So I think that's the big sticking point in the talks. And I think Ishiba can say, even if they don't get a deal, well, look, the only reason we don't have a deal yet is because we're doing the right thing. We're not going to cave in to pressure from Washington. So the question then is, do voters accept that? And we'll have to see what they think about that.
Bloomberg senior editor Brian Fowler there, and of course that pressure from Washington to reshape the global rules of trade also very much impacting China, particularly when it comes to some of these efforts to counter Chinese content and Chinese trade with key trading partners like Europe. We are seeing, of course, the Chinese Foreign Minister Wang on his trip in through the EU, which should go through to this Sunday, and he has met with the European Council President in Brussels on Wednesday. So we are seeing Wang speaking at the moment, saying that the EU and China have no fundamental conflict of interest, saying that they must avoid confrontation over any differences, saying that China and Europe should not be seeking confrontation. In a statement released after his meeting with the European Council, they said that China is willing to strengthen communication and coordination with the EU and prepare for a new summit, as well as to strengthen unity and respect each other's core interests. So all of this happening to try and deepen trade cooperation, extend that opening up and handle those differences at a time where we are seeing that increasing pressure coming from U.S. trade deals, particularly with Asian and European countries that would potentially restrict China's content and counter their trade practices. So China, again, with Foreign Minister Wang Yi in Europe this week on something of a charm offensive. More ahead on the Asia trade. This is Bloomberg.
The Kyoto Innovation Venture Summit begins in Japan today, with investors, business leaders, and policymakers gathering to discuss startup investment and business opportunities. The Japanese government has been pushing an ambitious plan to grow 100,000 startups and 100 unicorn companies by 2027. Let's go live to the event now. And our first guest, Akio Tanaka, is co-founder and partner at venture capital firm Headline Asia. Akio, great to have you with us. Of course, we just talked about the ambitions of the Japanese government. What more needs to be done to get there?
Good morning from Kyoto.
So, Akio, my first question was, what more needs to be done and what can the government do in order to achieve those ambitious targets when it comes to the venture capital landscape and new startups across Japan?
Yes, so for the last 5 years, Japanese government actually has been very actively promoting startup culture, which is actually very new to Japan. Traditionally, Japan's been all about big corporates, manufacturing sector, and IT and new technology sector hasn't been the main focus, but things are changing rapidly here. So there's now more availability of venture capital in Japan, and there are more startups. And one actually phenomenon that speaks to that change is our event. 18 years ago, we started IVS Summit with about 50 CEOs of startup community. Today, this event has grown into 12,000 people event, and in the next 3 days, we'll be having about 4,000 founders here and 120 VC firms. And this ecosystem simply didn't exist 20 years ago. And so we think that Japan is finally coming of its age in terms of having a real startup economy.
So, Akio, you recently closed a $145 million fund across Asia. Tell us a little bit about what excites you and where you're putting your capital.
Yes. So we think actually Japan can lead in areas like fintech innovation and AI application. Obviously, we all hear about what's happening with AI foundation models in markets like US and China. And unfortunately, that's not the area that Japan can lead. However, applied AI, meaning being able to deploy AI in workforce and manufacturing, and even the traditional sectors, Japan actually has a good opportunity. And this is because we have now rapidly shrinking workforce. So unlike some other markets where people are very sensitive about AI replacing jobs, that's not an issue here. We actually need AI taking over people's jobs because soon we won't have enough people covering all the workload that we have in all sectors of work.
It's interesting. You do also have a startup ecosystem. Are you seeing businesses and sort of tech models that are focused on that problem that you're looking to solve, which is to deploy productivity and workplace efficiencies amidst a shrinking demographic?
Yes, we are already seeing actually high growth rate from some of our portfolio companies that are actually focused on things like workplace productivity, AI agents taking over phone agents, or in the manufacturing sector where AI is actually doing the work of human engineer to accelerate development of, say, car manufacturing. So all those things are not just a pipe dream, but it's already happening in Japan.
How would you pitch the appeal of Japanese startups or VCs to global investors?
So I think the basic fundamental is that Japan still continues to be one of the top consumer economy in the world. We are probably number 3 or number 4, depending on what exchange rate you use. And but at the same time, the number of startups are growing here, but it's still not saturated in the way that U.S. market and Chinese market might be. So meaning that there are actually a lot of blue ocean opportunities that the investors can invest in here in Japan.
How would you compare the Japanese startup ecosystem and the focus of all of these Japanese companies with perhaps companies in other smaller economies like South Korea, Taiwan? How dynamic is Japan?
Yes. So South Korea and Taiwan, actually being a smaller economy than Japan, they actually, many of the companies, especially in Korea, focused on international development very early on, which is why actually Korea today has more unicorns than Japan. And Japan, unfortunately, because our domestic market was big enough, a lot of the earlier generations of the startups are focused on domestic market in Japan, where you can actually have a small IPO, small exit very quickly, but at the same time, because of the market size, we haven't produced as many unicorns as some of our neighbors. However, we are now trying to have a new, renewed emphasis on building a global startups from Japan, which is what Headline Asia is betting on, and also some of our government backers are focusing on this Go Global theme. And that's one of the themes that we are having actually at this conference here in Kyoto.
Akio, really great to have you with us. Akio Tanaka, co-founder and partner of Headline Asia. We'll have more conversations coming up from the Kyoto Innovation Summit. MUFG Innovation Partners join us later in the show with their insights on how tech investment in Japan is playing out. Later on Insight, we'll be speaking with the president of the gaming giant Sega. More ahead on the Asia trade. This is Bloomberg. Take a look at how we're tracking as we head into the start of trading here in Australia in about 8 minutes or so for that staggered open. We're seeing a little bit of caution there here in Sydney this after record highs again in the US session, but we're now turning our attention to that key jobs numbers as well as how that sort of refocuses on the Fed expectations going forward. We're still seeing quite a bit of dollar weakness there, but the pair we're watching is really as sterling traded against the dollar, that 100-day moving average seen as being vulnerable depending on what happens with the sort of political and fiscal situation in the UK there. Also watching Aussie yields, particularly on the long end. The debt manager here in Australia considering scaling back its issuance of ultra-long bonds as we see these rising yields globally making funding more expensive. One stock that we're watching today, a new listing, is the retirement community developer Gemlife. They'll be listing on the ASX today after the biggest IPO for Australia of the year. Paul Allen has more details. So have we seen a lot of interest?
Yeah, we have. 2 times oversubscribed this IPO, according to market sources. 750 million Australian. It's just under $500 million US, and overtakes Virgin now as the biggest IPO of the year. And that Virgin Australia listing happened just a week ago. So 180 million shares, priced at $4.16 a share. The trading's going to get underway in about 2 hours' time, so midday Sydney time. So that's the nuts and bolts of it. But behind Gemlife is quite an interesting story of a family business that has done very, very well. Peter Puljic came to this country in the 1970s, or the 60s, in fact, as an immigrant from Croatia. He was a plasterer. He bought a caravan park in Queensland to store equipment and converted that caravan park into high-end retirement living. And since then, the business has just grown and grown and grown. It's now got 9,000 land lease home sites. There's thousands more that are either approved or under development or greenfields as well. So the Puljic family is going to keep about 43% stake along with the Singapore-listed Thakral Capital. And normally would be down at the ASX for a day like this, but it's just going to be a small, tight family affair, no media allowed, which is, kind of appropriate considering the backstory.
So we've seen obviously a broader recovery for new listings. For this IPO in particular, what are they planning to use the money for?
Well, 270 million Australian, about 177 million US is being set aside to buy the portfolio of a rival company, Alaria, although it's not really a rival. Peter Puljic founded this one as well. So they'll be scooping up their assets, a portfolio there of 8 over 50s communities, and that purchase is going to make Gemlife the 4th biggest player in this space in Australia. The plan from here is just more growth. I mentioned that pipeline of other sites. There's plenty more to develop over the next decade as they see ongoing demand from baby boomers that just want to downsize. So they're looking for opportunities to build that portfolio. And in terms of profits, last year generated revenue of $266 million, net profit after tax of just under $82 million. For the next fiscal year, that's expected to top 100 million. So a reasonably good runway here.
Yeah, truly keeping it in the family. Started out as a renderer and plasterer back in the 1960s.
Yeah, Paul Allen there with that story as we continue to watch, of course, the market opens in Australia, Korea and Japan. And some of those stocks that we'll be watching include some of those Asian suppliers of Tesla after the EV maker's second quarter sales fell 13% from a year earlier. But with some analysts seeing this as the bottom of the slide. Also keep an eye on Apple suppliers after Bloomberg learned that Foxconn asked hundreds of its Chinese staff to return home from iPhone factories in India. This would be a blow to Apple's manufacturing push in the country. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. Of course, we have seen now President Trump announcing that trade deal with Vietnam. That will filter through the markets, Haidi. But what we're watching also is a bond space because, of course, we have that turmoil in the gilt space, and we are watching a 30-year JGB auction today.
Just unfortunate timing given all of the turmoil that we've really seen on the longer end of global bonds. Right, we're now seeing Australia thinking about scaling back issuance given all of the turmoil. But Shery, we're now also seeing that caution as we turn to that June jobs report. Will we see the impact of the volatility of trade policies play out when it comes to the US labour market?
Yeah, estimates saying that 110,000 jobs would have been added in the month of June, and also perhaps a slight uptick when it comes to the unemployment rate. But what that means for the Fed, of course, is a big question as we continue to see the volatility in the Treasury space. And of course, we talked about the gilt space where we saw 30-year yields jumping. We are watching the 10-year JGB right now at that 144 level, and of course, that 30-year auction later today. We've had fiscal concerns here in Japan as well, with yields rising to that record high around May. We had a solid 10-year auction already this week. So we'll be watching that test of demand by investors when it comes to Japanese sovereign debt. The Japanese yen at the moment strengthening a little bit, but at that 143 level against the greenback after already 2 sessions of losses for Japanese stocks. We're seeing a little bit of upside when it comes to the Nikkei of 0.1%. We had already seen pressure for Korean markets as well. We're talking about the Kospi being down, the Korean won also under pressure. Of course, it's all to do with what's happening with the trade space, because there were concerns, of course, about the Japanese-U.S. trade negotiations stalling, but we're watching, of course, the auto sector in South Korea as well as Washington and Seoul continue those discussions. At the moment, the Kospi and the Kosdaq gaining ground, Heidi.
We are seeing a second day of gains when it comes to trading in Australia. That staggered open just coming online. We're seeing upside of about 0.2%. They're watching to see if some of those copper names that have rallied so much, given prices topping at that key level, will continue to see that rally. But at the moment, we're also seeing the Aussie dollar pretty flat at the moment, but still comfortably above 65, almost at that 66 US cent level there. The dollar not doing very much. We saw some earlier gains, and then that sort of receded in the overnight session. Watching a lot of these sterling pairs as well, given the political and fiscal turmoil that played out in the overnight session for the UK as well. Also watching treasuries and some of that sort of volatility at the longer end as well, which is passing through, as I mentioned, to Australia and New Zealand sovereign bonds. Australia now mulling lowering its ultra-long bond sales and issuance amid this ongoing volatility and how expensive funding has now become. But so much of this, as Shery mentioned, coming down to that trade deal. President Trump saying that the US has reached that trade agreement with Vietnam, giving full market access to American companies, slapping a 20% tariff on all Vietnamese imports. Hanoi hasn't confirmed the framework deal, which would be the third reached before the July 9th deadline. Our Bloomberg News Desk editor Jill Deeses joins us now for more. So, Jill, what do we know about sort of the contours of this deal and what's been agreed, even though, of course, there hasn't been a confirmation from the Vietnam side?
Well, yeah, I mean, Heidi, I think, first of all, I just want to point out that we do not yet have a term sheet from the White House. They haven't released anything, giving a lot of further details on there. So really, I think there's just 2 numbers that I can give you here. First of all, the deal that Trump has announced would include a 20% tariff on Vietnamese exports to the U.S., as well as a 40% levy on goods deemed to be transshipped through the country. So what that tells me is that as part of this deal, there's at least somewhat of a focus, perhaps, on goods that, maybe shipped through Vietnam from China, for example. That's one thing that the Trump administration has made very clear as it continues to negotiate these types of deals, that one thing it's focused on, particularly in some of these Southeast Asian countries, is that it really wants to try to figure out a way to box out China or otherwise, convince more manufacturers to move goods that they manufacture from China to other parts of Southeast Asia, including, say, Vietnam. So that's one thing that those numbers perhaps tell me. But again, I do want to caution that we don't have a term sheet. We don't know exactly what the Vietnamese are saying about this. Still, obviously, waiting more fulsome confirmation from Hanoi about what exactly we're expecting with this deal. But yeah, so it does tell you, obviously, we're approaching that July 9th deadline that Trump has set for kind of coming up with some deals to address the reciprocal tariffs they announced back in April. But we're still getting a lot of information that's still coming out. We'll see what ultimately is in really kind of the nitty-gritty of this particular deal.
Jill, let's talk a little bit about China, because as you mentioned, they're trying to box in China, despite the fact that they do have the supposed framework in place that has cool tensions when it comes to those tariffs. What are they trying to do in terms of using other trading partners and new deals in order to restrict Chinese content?
Well, again, Shery, I think, you look at some of, the strategy that's actually being, coming here. I think that, first of all, the idea is really kind of putting pressure on the U.S. trade partners to restrict trade that they're doing with China. Obviously, we've seen this happen not just in this latest round of trade deals, but over the last several years, the U.S. attitude toward China has been very much, particularly with its biggest allies, saying, are there sanctions or other restrictions you can put in place in terms of dealing with in terms of working with the Chinese technology or Chinese good. There's a lot of, obviously this more fulsome effort to sort of, prevent China from developing, advanced technologies or, working with, say, manufacturing parts or, parts that, other companies in other countries might make and sending those to China. So that's always a big part of this equation. But again, now you're seeing this kind of play out, I think, a little bit in some of these trade deals here. Obviously, we're still waiting for more on that Vietnam deal, but that transshipment element of this trade deal, again, does lead me to believe that there's a component in there that's kind of directed toward trying to shut out China. So again, yes, obviously, as the United States continues to, it's made its own trade deal with China in the wake of all of this, the fact that you've got all of these other countries that are still up in the air in terms of what their individual agreements look like with the United States, I think does suggest that there is a strategy on the part of the United States here to try to, unite a lot of these countries and kind of, create deals that, are obviously favorable to the United States, but that also may be ultimately unfavorable to Beijing.
Which is also why we've seen Beijing on this, multilateral trade and diplomatic charm offensive, right? The Foreign Minister Wang is in Europe through to this Sunday over the weekend for the high-level strategic dialogues with the EU. So he's really, pushing home the point of collaboration, working together, confronting differences as such. There's a lot of sort of really historic trade and diplomacy ties there. Could that be a point of strength for Beijing?
I mean, potentially, and certainly, yes. I'd imagine that if you're Wang Yi, you're the foreign minister, you're trying to smooth over things in Europe, particularly ahead of, there's a pretty critical EU-China summit that's happening in Beijing later this month. So I think, a lot of what he's doing in Europe right now is kind of paving the way for those further talks that they're going to have at the end of the month. Yes, obviously, there's a ton of incredibly critical trade that goes through between the EU and China. We know that Chinese EVs, obviously have a pretty big presence in Europe. I think, China is obviously, interested in continuing to develop some of those types of ties. So yes, obviously, if you're Beijing in all of this, you're trying to strengthen your position as well with all of the trading partners that you had. I would point out that, as Donald Trump and the Trump administration were trying to develop all of these other trade deals, Xi Jinping himself, the president of China, was going through and trying to foster ties with a lot of trading partners in Southeast Asia. So this really is a case where you've got the world's two foremost economic superpowers that are ultimately trying to strategize and trying to work with their individual trading partners, because these are such important economies. They do have incredibly strong trading partnerships and relationships, and they obviously have vested interests in keeping those strong.
Bloomberg News Desk editor Jill D says there with the latest on trade. And let's bring in the market implications. Kai Wang is the Asia equity market strategist at Morningstar. Kai, to be fair, we've seen sort of limited reaction even when there has been sort of more negative news flow on the issue of trade. Does this latest deal with Vietnam, which is the third, if you count the sort of framework agreements with China, really move the needle towards more positivity in a market?
Yeah, I mean, the transshipping tariff here is about 40%, right? Our base case for China is about 50%. So it actually kind of works out in its favor if China wants to ship goods to Vietnam for more shipments to the U.S. here.
So what are the implications, given that we do still have US markets trading at record highs? Some of the Asian markets are trading pretty close to record highs as well. Is this a sense that the sort of investor narrative has gone back to focusing on the opportunity for Fed easing, the fundamentals for earnings season coming up, and kind of assuming that when it comes to trade, President Trump will back off from some of the biggest threats that he's made?
Yeah, I mean, it waits to be seen to see what really happens here. One of the main narratives that we still have for China is that it will continue its fiscal measures. That, in turn, is going to drive near-term earnings. Fundamentals have been improving in China the last two quarters or so. So, again, the narrative outside of tariffs is that China will continue its the government policies.
So what's the narrative for you when it comes to the markets? Do you like Chinese assets?
Yeah, we think that there is a little bit way to go here. Before the truce announcement that was announced, we advise people that usually during upswing and rallies, communication services, consumer cyclicals, and tech are usually the sectors that benefit the most. We're still seeing some of those sectors being a little undervalued. So we still think that there is a little bit of a way to go there. It's still undervalued a little bit here.
We're covering the sovereign debt markets very closely this week, especially with the turmoil in the gilt space, and we're watching a 30-year JGB auction today. When it comes to the equity space, what are the implications of so much volatility when it comes to the debt space? And, of course, the yields that rose here in Japan, at least, to record highs in May.
Yeah, so the base case here for Japan tariffs is about 14%. But if, Trump enacts his policies here, the bear case is about 30%, which will likely kind of affect the GDP growth there. At that point, the rates, the BOJ will probably keep the rates low, and that will probably have greater implications on the bond market there.
Wang, Asia equity market strategist at Morningstar. This is Bloomberg. President Trump has met with conservative lawmakers to discuss his signature tax legislation as doubts grow over whether the bill can pass by July 4th. House Speaker Mike Johnson can afford to lose only 3 Republican votes in the closely divided chamber.
Every caucus in the House has had the Speaker's attention. I've heard their concerns about it, and the thing about it is when you have a piece of legislation that is this comprehensive and with so many agenda items involved, you're going to have lots of different priorities and preferences among people because they represent different districts and they have different interests. But we can't make everyone 100% happy. It's impossible.
Congressional reporter Steve Dennis joining us now from Capitol Hill in Washington. And of course, Steve, we had seen it barely passing the Senate with the vice president's tie-breaking vote. So how much more difficult is it in the House?
I think we're going to see another vote that comes down to 1 or 2 people. But there has been a vibe shift here in the House in the last few hours, with more optimism that they're going to get it done tonight, maybe very late tonight, maybe in the early hours of the following morning. But a succession of conservatives have been meeting with either the president or the speaker, and they've been coming out and saying more positive things about the bill. And one of the things they seem to be negotiating for is a future bill, another bill that would have more spending cuts, and trying to push that through Congress later this year. That's going to be very hard to do without the jet fuel that extending the Trump tax cuts provides this package. But conservatives want to have more spending cuts. One of the big problems with this bill for a lot of the fiscal conservatives is that it adds $3.4 trillion to the deficit over 10 years. That's, a lot of these people ran on not raising the debt limit, not raising deficits. But the reality is there aren't enough votes in the House and the Senate to cut spending as much as they want to cut taxes.
Steve, so there's still a chance that the president will get his big political win. I do wonder, though, given there are implications for a lot of sort of mid to lower income earners, which form part of his political base. Do we see an expectation of voter blowback here?
Yeah, I think that there's a very big risk that the Democrats could ride a wave of discontent among folks in the working class. A lot of these people, millions of people who potentially could lose Medicaid benefits or have new work requirements and other issues for food stamps or Medicaid benefits, they're going to potentially turn out to vote for the Democrats. That's something that the Republicans are going to try to avoid. And some of these cuts don't really take effect for a few years. Some of that pain is sort of delayed, and there's some upfront benefits and new tax cuts like no tax on tips or overtime. So the Republicans hope that they can manage to keep their thin majorities next year, but there's a risk they could lose them over this bill. And then, going into the next presidential election in 2028, a lot of the cuts will be taking effect in that 2028 year. And there could be a lot of discontented, unhappy people who had health insurance and have lost it, had food stamps and lost it. And, that's going to be a real question, a real test. It's very unusual in Washington and, frankly, anywhere else on Earth to take away health insurance from people. Usually when you give them a new benefit, have a new entitlement program, it stays there forever. And this is going to be a real test of whether Trump can continue to have that hold on that sort of working class population that put him in power. He said that he wasn't going to cut Medicaid. And the reality is, if you get a $35 copay, which many people on Medicaid will now have $35 copays for some of their health care, you're going to notice that. And I think we'll see how long it takes to phase in and what happens next year in the elections.
Bloomberg Chief Dennis there with the latest, and of course that tax and spending bill that's trying to pass Congress, especially with ongoing negotiations in the House. But we do have breaking news at the moment. We're now hearing from Siemens that they've received notice from the United States that they have rescinded their chip software curbs. Again, Washington now rescinding China's chip design software restrictions. Siemens saying that it has resumed chip software exports to China. Remember, these were one facet of the export controls applied on to China coming from Washington. We had seen the Geneva framework being agreed in May and reconfirmed in June. And at that time, there was more clarification that China would allow rare earth mineral exports while Washington would lift the recent export controls on China. What it's specifically those export controls were was still being debated. But right now, we're now hearing from the German company that they've received actually notice from Washington that the country has rescinded those chip software restrictions. Heidi.
Shery, we are taking a look at how futures in Europe are opening up at the moment, and of course all of the focus remains on UK assets. Markets are still worried about the risk of Chancellor Reeves's departure, according to a note from CBA just this morning, saying that even though Prime Minister Starmer's office later reiterated its support or interest in keeping Reeves in office until the next election, there are still these jitters across markets, and we have seen that sort of continued pressure when it comes to trading in sterling, unless we see more measures to restore market confidence in UK finances. So we continue to watch UK assets very closely, particularly as we saw that big move when it comes to the gilt market and how that sort of played out for other longer end sovereign bonds as well. Sterling at the moment a little bit flat, given that we have seen continued downside for the US dollar there as well. More ahead on the Asia trade. This is Bloomberg.
Take a look at how some of the biggest Tesla suppliers across Asia are trading at the moment. A little bit of a mixed picture, but some big upside for LG Energy Solution in South Korea. We had seen Tesla's vehicle sales declining less than expected in the last 3 months. But, of course, there are still challenges ahead, including the potential elimination of tax credits for EV purchases if that tax and spending bill in Congress right now actually passes in the U.S. For more, Bloomberg's Danny Lee joins us now from Hong Kong. And Danny, as I said, I mean, the declines were less than expected, but still we're heading for second annual decline in sales for Tesla.
Yeah, the market reacting accordingly, less than feared, frankly, and Tesla shares on Wall Street closed around 5% lower, almost erasing the steep losses on Tuesday after the spat with Elon Musk's spat with President Donald Trump. But as you said, the losses, the kind of quarterly performance, it does just reflect this potential bottoming out in Tesla's vehicle sales. And so there's a lot of optimism there that from the market's perspective that Tesla can move forward with ramping up on its redesigned models, and also just looking ahead to a more affordable product. But still, that is the kind of stuff that will need to drive it forward. And as we look to the end of the year, it's indeed the fact that Tesla is staring down the fact that it could make a second annual decline in sales. And so that is still the worry that it's going to be or look weak for the next couple of quarters.
Has the management leadership sort of political risk from Elon Musk, and obviously his now revived feud with the president, the criticism over the tax bill, has that sort of started to fade in influence when it comes to demand for Tesla?
Not necessarily, and I think the political risk is still high. Whether it be just even though Elon Musk has detached himself from President Donald Trump, I think the damage is clear in terms of the sales effect that it has seen in terms of the likes of Europe. But the risk directly for Tesla and for Elon Musk is that, again, the threat of all the subsidies that Tesla benefits from the United States, the billions of subsidies are an overhang when it comes to President Donald Trump threatening to take that away. So I think if that comes and falls through, what does that actually mean for Tesla's bottom line as we head into the end of the year and for Tesla's finances? And that could pull a squeeze, especially as Elon Musk does take great control of the sales for Tesla in some of the key markets like Europe and North America. So, there's not much someone like Elon Musk could do unless he really patches things up with the president. So this is something that we'll be closely watching towards the end of the year.
In a lot of markets, including here in Australia, we've seen record sales with BYD really surging ahead of demand for Tesla. Is that something that's sort of an ongoing risk, the competitiveness of Chinese players?
Yeah, there is that growing headache for Tesla, not just in the likes of Australia, broader Asia, but also in Europe, where we are seeing these Chinese players like BYD willing to absorb higher tariffs, putting in a greater product mix, and especially puts Tesla under more pressure, given it has a smaller lineup. And any product rollout it is putting out is focused squarely on its home market of North America at the moment. So there is a lot of competition that is going to potentially continue to hurt Tesla. But this is where, with Elon Musk back in control, whether he uses pricing or whether he accelerates some of these product rollouts, would be able to give him a bit more of an edge as we move through the rest of this year.
Bloomberg EV supply chain and aviation reporter Danny Lee there. Well, Chinese EV giant BYD is pausing its plans for a major plant in Mexico, citing global trade uncertainty. The company says it still aims to expand its production footprint, but wants to wait for more clarity before making a decision. BYD recently opened its first factory outside Asia in Brazil, which will be capable of producing 150,000 cars annually. More ahead here on the Asia Trade. This is Bloomberg.
Let's head back to the Startup Conference IBS in Kyoto, where Japan's innovation landscape is in focus. Our next guest is from the corporate venture capital arm of MUFG, which runs 5 funds and manages $650 million in assets. They've invested in the likes of Numo, Sakana AI, and Grab. Joining us now is Takashi Sano, CIO at MUFG Innovation Partners. Takashi, really great to have you with us. So tell us a little bit about Japan's startup environment, and given, of course, the geopolitical uncertainties, the economic uncertainties, how the year is shaping up.
Thank you for having me. Well, Japan startup ecosystem has been really growing and developing, especially the past few years. And but now we have new challenges facing that Tokyo Stock Exchange reform its growth market, which requires startup to really grow its meaningful scale for valuation. But that actually accelerates a lot of great innovation, I feel, at least. And then going forward this year, startup in Japan has been looking more at the scale, really meaningful scale in the size, and also providing value to the market. So I've been really excited about Japanese startup ecosystem.
Takashi, at the same time, we're seeing the government wanting to tighten the listing criteria for the Tokyo Stock Exchange growth market. Will that have an impact?
Yep. Yeah, that's definitely have an impact. But to us, we are investing globally, and Japan is one of those markets which is a very important market. But in that perspective, this reform was sort of necessary, I feel, as we need more growth and more scale from startup, which is providing meaningful impact in the market, in the society as well, which Japan especially requires. So I believe, this impact a lot, but this impact positively.
When it comes to the global appeal, right? What is the appeal and the pitch to global investors to invest more in VCs or startups in Japan?
Yep. As again told, we also invest globally, and we have a lot of co-investor, international investor, always working with, and for the past few years, definitely their attention towards Japanese startup really growing and changed drastically, and that is coming actually from the quality improvement and scale expectation from Japanese startup and founders. Some of our investor friends told me that Japanese founders' qualities are very well globalized now than a few years ago. So that's why they started looking at Japan market more and more above before. So we expect a lot of investment coming from international investor into Japanese startup more. Yeah.
How come large-scale exits are still less common?
Yep, thank you. This is going to be the next important topic, and but as time goes by, I believe because of the funding situation improving, of course still a lot to go, but still improving, and this Tokyo Stock Exchange market reform will help founders build more into the bigger scale, so that we will expect a lot more meaningful IPO is also happening. But at the same time, Japanese corporates, including us, MUFG, started looking at deepen the partnership with startup to acquire the startup or invest in the startup with meaningful scale. So both sides, M&A and IPO, will provide meaningful size of exit opportunity for investors.
What's your investment philosophy or criteria that you need to tick in order to make these investment decisions? And is there anything that excites you right now?
Yep. The things what excites us the most is the scale and partnership opportunity with startup. So we are the banking group, global banking group, which is really eager to innovate and transform themselves by digitally, by AI, with startup innovation. So as far as we can work with startup for those perspectives in the meaningful scale as global banking group, we'd like to invest with startup to work with them, collaborate with them to help them scale, as well as help us to transform. So that's something what we are looking at startup investment.
Takashi, we've seen, of course, a turmoil when it comes to particularly longer end of JGBs and the expensiveness of funding. And there is also the broad expectation of BOJ normalization after so many years of deflationary conditions. Are the expectations of more expensive funding having an impact in terms of appetite for investing into VCs and startups?
That's a pretty difficult question, but for now, we don't see any negative impact for that because of several reasons. One reason is because Japanese VC funding, LP funding from the BC to the BC is mostly coming from corporate money, which is sometimes directly related, but not that much related to those like a macro environment situation, but more like corporate financial performance situation. So that stays quite well for a while. But at the same time, we need more institutional investor to the Japanese VCs, which is coming actually, but we need more scale for that. That may impact, but again, because of the startup founder environment has been really developing, so which I'm more optimistic about the situation for Japanese ecosystem.
Takashi, really great to have you with us. Takashi Sano, CEO at MUFG Innovation Partners. And we have more conversations lined up for you coming from the Innovation and Venture Summit in Kyoto. Later, we'll be hearing from the Japan Investment Corporation and Sega Corporation as well, Shery.
Right, Heidi, and of course, we're following Apple's suppliers in the session today. We are watching for any major hit when it comes to the company's global supply chain strategy. Bloomberg now learning that Foxconn is pulling hundreds of Chinese engineers and technicians out of its factories in India. The move threatens to derail Apple's high-stakes effort to shift manufacturing away from China. Let's bring in our China correspondent, Mingmin Lo, for the latest. Mingmin, do we have any idea why they're pulling out of India?
Yes, we haven't heard from Foxconn, and currently it's not clear what is the reason here. But what we do know from sources is that this move began about 2 months ago, and about 300 of these Chinese staff had already left India, leaving behind some mostly support staff from Taiwan. There are a couple of conjectures that are floating around, according to analysts. One view from our Bloomberg intelligence team is that this could be perhaps a retrenchment exercise that is in anticipation of tariffs headed for Indian goods. But bear in mind, the Trump administration had also carved out exemptions for electronics. So another possible reason could be perhaps the Chinese government stance in trying to strengthen its own supply chain, because we know that the Chinese government, at least verbally, has been encouraging local officials to curb any tech transfers or the export of specialized equipment to countries like India or other countries in Southeast Asia in an attempt to discourage manufacturers from diversifying their supply chain. So it is not clear at this point whether there was pressure from the Chinese government to withdraw some of these Chinese workers from the Indian factories. Bear in mind, there are a lot of moving parts, because it seems like U.S.-China tensions are also quietly cooling down. We got the news earlier from Siemens that it is rescinding some of these curbs on chip design software to China. So things are developing. We don't have a full picture of what's going on here. Certainly something to keep a close eye on.
What are the implications then of the move? Could we see production being affected?
Yes, indeed, because India has been taking on an increasingly important role for Apple. Apple was planning to ramp up production there. They are in the process of building a new plant in southern India, so it's not clear whether this disruption could hamper those plans. The Chinese workers have been critical. They bring with them a lot of experience. They have been training the local workers, and the India plan was supposed to be able to help ramp up production so that by late 2026 it will be able to supply to the U.S. market. That was in response to Trump's tariffs. But this is a plan that President Trump has also been criticizing, calling on Apple to produce iPhones in the U.S. instead. But of course, the higher cost of labor there has made that rather unfeasible. And if China does put in place certain measures to maybe make it difficult for its Chinese workers to relocate to the U.S., that would be another sort of difficulty that Apple could face in trying to onshore manufacturing. But for now, there could be some impact on the efficiency of these assembly lines, although the Indian government says that they have observed no significant impact so far. They also do not know the reason for the move to remove some of these Chinese workers. But yes, possibly some efficiency impact on the production of the latest iPhone 17 models.
Bloomberg's China correspondent Mingmin Lo there. Let's get the latest from the corporate front. And OpenAI has agreed to rent a massive amount of computing power from Oracle as part of its Stargate initiative. Sources say the rental will total about 4.5 gigawatts of data center power in the US. Oracle is also said to be developing multiple data centers across America to meet the additional demand from OpenAI. Microsoft is cutting about 9,000 workers in its second major wave of layoffs that we've seen this year as it looks to rein in costs while ramping up AI spending. The company says less than 4% of the total workforce is affected by the cuts that are meant to streamline processes and management layers. Microsoft also cutting 6,000 workers in May, focusing on product and engineering positions. TikTok is cutting more workers from its US e-commerce unit in a third round of layoffs there since April. A company spokesperson says a difficult decision was made to adjust parts of the team, but didn't reveal exactly how many jobs were cut. TikTok Shop already reduced headcount in April and May after falling short of internal sales targets.
Take a look at how Japan is trading early in the session. We're not seeing much movement in the stock market side. Also, very little strength in the Japanese yen. But what we're watching today is a bond space because we have a 10-year yield right now trading like this. Yield surging slightly, but of course, 30-year yield still under pressure at a time when we do have the 30-year auction. And remember, we're just coming from volatility in the gilt space. 30-year yields over there surging on that fiscal drama unfolding in the UK. And then that pressure treasury markets, and now we are headed toward the 30-year JGB auction. We did have a 10-year yield JGB auctions earlier in the week, which could support a little bit the market, but of course it's a test for demand that continues. We have more ahead. This is Bloomberg.
Take a look at what we're seeing here in Australia. We're seeing a bit of a reversal of those earlier gains for the ASX. We're seeing now downside about 0.2%, really being led lower by financial, some of the consumer discretionary names, but 2.5% almost, or I should say 2.25% higher when it comes to materials as we continue to see that copper price elevated above that $10,000 level that we saw overnight. We're also watching any volatility in the bond space as well after what happened in the UK with gilts overnight, but also Australia considering lowering the issuance of ultra-long bond sales amid this ongoing volatility and the expensiveness of funding. The Aussie dollar holding pretty comfortably close to that 66 US cent level as we continue to see that weakness in the US dollar going into those June jobs numbers. One stock that we're watching today here in Australia, the retirement community developer Gemlife, listing on the ASX today after Australia's biggest IPO of the year. Paul Allen's here with more. Quite a bit of interest for this IPO.
Yeah, 2 times oversubscribed apparently. It's going to raise 750 million Australian dollars. It's just under $500 million US. And it overtakes Virgin Australia, the airline, as the biggest IPO of the year, and Virgin just listed a week ago. 180 million shares, $4.16. The trading's not going to start until midday local time. But behind all the data, there's a really interesting story behind this business. It was founded by a gentleman called Peter Puljic. He was an immigrant from Croatia in the 1960s, bought a Queensland caravan park to store his equipment. He was a plasterer and a renderer, and then he just converted that to a high-end retirement community and didn't look back. 40 years later, 9,000 land lease home sites, thousands more under development, either greenfield or approved, and he'll be holding the family will retain a 43% stake along with the Singapore-listed Thakral Capital. And it's a family affair. This normally would head down to the ASX for a listing of this size, but nope, no media allowed, just family only.
So what are we expecting them to use the funds for from this IPO? And also, what does the outlook for profitability look like?
Yeah, a big chunk of it, about 270 million Australian, about 180 million US, is going to be used to immediately acquire another business, Ilaria, a rival in the space, which was also founded by Peter Puljic. It's one of his own companies. That has a portfolio of 8 over 50s communities. So that purchase is going to make Gemlife the 4th biggest player in this space in Australia. And the plan is just to continue growing. There's a pipeline of more sites for development over the next 10 years. The CEO, Adrian Puljic, who's Peter's son, sees strong ongoing demand from baby boomers who want to downsize. So they're just looking for opportunities to keep on building that portfolio. Last year, net profit after tax, 81.7 million. Next fiscal year, that's seen topping more than 100 million. So slow and steady growth is the plan.
Bloomberg's Paul Allen there. On the topic of new listings in Hong Kong as well, we'll be speaking to the CEO and founder of Cloudbreak Pharma, Jin Song-Ni, after the drug company makes its trading debut on the HKX today. You can catch that exclusive conversation on the times there on your screens. More ahead on the Asia Trade. This is Bloomberg. Take a look at what we're watching across the commodities complex. Their oil continued to pull further away from some of the highs that we saw, of course, in the middle of the geopolitical conflict in the Middle East. We're seeing Brent crude there trading just shy of $68 a barrel. They're off by about 0.4%. We have seen that US trade deal with Vietnam lifting sentiment a little bit more broadly, but at the same time, we're seeing output climbing. Saudi Arabia really resuming their pursuit of gaining market share with that surge in production, adding downward pressure on crude prices. So an average of 28 million per day led by the Saudis. So this reclamation of market share is part of that broader sort of OPEC plan, but it is having that downward effect on pricing. Copper is the other one that we're watching at the moment. Not doing too much at the moment, but we have seen prices climbing above that $10,000 US level as the tariff concerns driving sort of some of the arbitrage that we're seeing in gaps between London, New York and Shanghai. We saw a record amount of copper arriving in the US this year on these expectations of the import tariff, and that's been driving a strong rally in COMEX copper prices. Let's get some more from our managing editor for commodities and energy in Asia, Clara Ferrer-Marquez. Clara, let me start off with sort of the trade news. Progressively, we are seeing some moves being made when it comes to these deals before the deadline. Is that having a massive impact when it comes to upside for commodities market sentiment?
I wouldn't say massive. It's pretty steady this morning, but what we are seeing is certainly it's helping sentiment. You're seeing it helping sentiment overall in copper, just general idea that we may avoid a global recession. We're seeing it in oil as well, perhaps hold up against some of the more bearish factors that you mentioned earlier, including OPEC with the meeting this weekend. So it's certainly helping, though, of course, for copper, the really big question is the 232 investigation, and we won't know about that until a little bit later in this year.
What can we gauge about Chinese demand given how reflective commodity markets are when it comes to where the Chinese economy goes from here?
I think the really interesting thing on China the last few days is this in return to the notion of cutting back capacity. It was really helping steel and iron ore yesterday, also steel makers. We're seeing it in solar as well. And again, the narrative is in the papers again today. So we'll really be looking to see how that translates into reality. Of course, it's not new to see this narrative coming through, but if it feeds through to actual capacity cuts, that would really help to sustain things. That's probably more significant at this point.
When it comes to oil markets, is there sort of firm resumption of focus now on broader supply and demand fundamentals, particularly the sort of re-addition back in supply by the Saudis now that some of the Middle East tensions have calmed, at least for now?
You're really looking at this sort of a market looking at two sides. On the one hand, we have some bullish factors. Obviously, we have this sort of general economy around the trade deals and some optimism there. We're also going into US driving season. So there is some sort of good news. Heat as well, which generally tends to benefit. But at the same time, we do have this note of supply and a big question mark around long-term global demand. So it feels a little bit steady at the moment, but definitely the risks are to the downside.
Bloomberg Managing Editor for Commodities and Energy in Asia, Clara Ferreira-Marquez, as we continue to follow, of course, all negotiations surrounding trade deals and export controls when it comes to China and the U.S. Just to recap a story that we had earlier, Siemens has received a notice from the U.S. government saying that Washington has lifted export restrictions on chip design software for China. The German supplier has restored full access to its software and technology for its Chinese customers, according to a statement by the the company. The U.S. Commerce Department's Bureau of Industry and Security sent letters to some of the leading providers of electronic design automation in May, telling them to halt shipments to Chinese customers. This was reported by Bloomberg News, and we're now hearing from Siemens that they've actually received notice from Washington saying that it's lifted export restrictions on those chip design software for China. Haidi.
Take a look, Shery, at what we're watching when it comes to the start of trading across Greater China. Taiwan futures as well. They're looking all pretty positive. We do have, of course, some of the trade implications, but also perhaps a hint of caution as we look to those June jobs numbers out of the US, the implications as to whether we see the impact of the sort of trade uncertainty and how that feeds into these Fed expectations, which are around between 2 to 3 moves to cut this year, potentially even as early as this month. The dollar could potentially see more downside, though, in Asia trading as we see some of those pairs coming online today. S&P futures looking mildly positive at this point. Taiwan futures up by just about 1%. We're watching some of those Tesla suppliers as well as Apple suppliers there, given the movements on potential production changes that we've been watching. FTSE A50 China futures up by just about 0.1%. We're seeing that diplomatic overture continue when it comes to the European trip from Foreign Minister Wang. They're working on collaboration, not confrontation. This even as the US continues to try and sort of box China out, really, of some of these trade deals with Asia and Europe. So watching for any kind of reaction when it comes to Chinese equities in the day's session.